So I did my economics honors from Delhi University, SGTB Khalsa College. I graduated this year only in 2021. And now I'm an incoming master's student at Boston University, US. So I have my flight next Saturday. So I'm going to do a master's in economic policy. So economics is my, it's like my passion or my happy place, you can say. And I'm a finance enthusiast for sure. Economics and finance don't go hand in hand. They are a bit related, but again, they're two different roads. People mistake them for the same. It's not the same. So finance is like my side hustle and something which I learned on my own and developed my passion around it. I started creating content in January 2021. Like it's been like what, 8 months. And the journey has been great. I've learned a lot and I've been teaching a lot of people. And today here I am yet again trying to share my experience and knowledge with you guys, right? So the disclaimer here is that so I am not SEBI registered. Many people might ask what is SEBI, and so SEBI is the governing body. Like for banks, it's RBI, the Reserve Bank of India. So for the stock market, it's SEBI, Securities Exchange Board of India. There are certain professionals who are SEBI registered, and then if they are teaching out people and telling them about stock market and all, that's okay. But if you're not SEBI registered, then SEBI says that if a person is not SEBI registered, you should not listen to him blindly. Just try to learn and then explore more and then apply, right? And I'm not even a certified professional. I'm just a person who has a lot of practical experience. Like I know a lot of people who have 10 degrees, certificates and all, but they don't even know the basics, right? So I really am a person who thinks that investing is a very simple thing and everyone should know it. And I will not give any stock tips for sure. I'm not into that business, because first, I'm not that I'm not that big a professional, and second, there's a lot of risk involved. And as you all are starting new, I don't want you to incur any losses because of me, not even a single penny. And this workshop is only and only for educational purpose. So yeah, let's start. So now here we'll be talking about what is stock market. Essentially, stock market is just a setup. Okay, so there are a lot of companies. Even many of you might be from business class families. So just suppose, for example, your father is expanding the business, right? So he's having a business of 100 rupees, for example, and now he wants to expand his business to probably 150 rupees, right? So he'll approach the bank and he'll say that, hi, I want 50 rupees additional to expand my business. Now bank will analyze that what type of business it is, how risky it is, and bank might hesitate in giving that 50 rupees to your father because of the risk involved, right? So your father would be like, where else can I go and raise money? Like bank might give 10, 20, 30 rupees. After that, there's only one option left. And that option is, approaching the stock market. And for the same reason, so for any company who approaches the stock market, it approaches to SEBI, which I mentioned earlier, the governing body of the stock market. And then they say that, hey, we are in this business. These are our books. They tell everything about the business, the whole paperwork and everything. So we'd like to list ourselves in the stock market so that people can buy our shares and invest in a company. So every time you're buying a share of any company, you become a very teeny tiny small owner of that company. For example, if I have Reliance shares, then I am a shareholder of that company. That means I have a very small share in the whole Reliance Industries. So the money is directly going to the owners of the company. So the 100 rupee business turns into a 150 rupee business. And as the business will grow, so the shareholders, that is you and me, will benefit, because when the 150 business gets into 160, 170, so the share price will also increase. What is investing and what is trading? Investing is all like investing. When you say investing, that means long term. I believe that investing and long term are like synonyms, because everything which is a horizon more than a year is investing. So it can be a year, 3 years, 5 years, 10 years. And I know people who have been holding stocks since 30, 40 years as well in my family and some friends, right? So investing is all about long term and staying in the company no matter what happens, except for any adverse news. For example, if a company is involved in a scam, or probably if a company gets bankrupt, so obviously you wouldn't want to stay in the company. But if everything is okay in the company, no matter what is the economic situation. For example, COVID came, stock market crashed badly. So a prudent investor wouldn't care. He'll be like that, I believe in this company. Probably 1 or 2 years, it might not grow that well, but this is bound to grow. So that is investing. And now what is trading? So trading starts from 1 minute to 1 year. So you might buy a stock at 12 in the afternoon, and you might sell it at 12:01 in the afternoon. That is 1 minute or even seconds. So that is trading, just buying a stock and selling a stock quickly. It can be a day, like you can buy in the morning, sell it at the afternoon, or you can buy it today and sell tomorrow. That is called BTST, buy today, sell tomorrow, right? So trading can be even for a weekly, so you can buy on Monday, sell on Friday, or it can be monthly, or it's called swing trading. So swing trading is basically, it ranges from 1 month to 6 months to 9 months as well. Intraday trading is for the same day, BTST is for today and tomorrow. So trading is all about holding the stocks and just selling them quickly and realizing a profit. And what are technicals? I hope I'm being absolutely using the basic language. So if you have any doubts, just let me know, right? So now investing is all about analyzing the business. So आपको कैसे पता है that you want to invest in Bharti Airtel? Because you saw that what all businesses it is involved in, what all services it is providing in, right? So fundamentals is all about analyzing the company's books and its business. So business, you understand what is a company's business. So books are the financial statements, like the balance sheet, profit and loss statement, what exactly is happening on numbers, how much profit are they earning, what type of loans are they having, are there any liabilities, what type of assets they have. So that is about fundamental analysis. When you analyze all these things and make an informed decision on the basis of these things, it is called fundamentals, and that analysis is called fundamental analysis. While technical analysis, technicals is not like, technicals is for trading only. So people, a trader won't care what Bharti Airtel is doing. They won't care that Bharti Airtel is rising or decreasing, or any company. They'll just see the charts. So every stock has a price movement, right? And when price movement is plotted on a graph like we do in school, so that becomes a chart. It's a whole zigzag or whatever, like line graph or whatever you call it. So that's a chart. So studying a chart is about technicals, and that is, the analysis is called technical analysis, right? So that's about stock market. What is investing, what is trading, what are fundamentals, what are technicals, and you should have to choose between one, because if you sail in both the boats, you wouldn't end up anywhere. Like, that's my thing, right? So, and as a beginner, I would suggest you to first understand the investing part, right? Because that's basic and that's more important, because trading is not everyone's cup of tea. It has a lot of risk involved, and it might need you to give up a lot of things. For example, a person who wants to be a trader, he might have to give up his job because he gets time on weekend, and on weekend the market is closed. And there are certain companies, like I worked in Bain and Company, they don't allow you to trade because of there are conflict of interest. So for example, Bain has Tata Motors as his client. Tata Motors come to Bain and they say that we have some problems, you can solve that for us, right? And I, as an employee, if I buy Tata Motors share, if I trade in them, it's suspicious that that person is working in Bain, Tata Motors is there, so he might be having some information due to which he's trading. So that is called inside information. अंदर की खबर जिसे बोलते हैं. If you have seen the Harsha Mehta series, Scam 1992, you might be aware of that very, very well, right? So let's focus on investing right now. So investors mindset, it's one of the most important thing which you need to build up, and it takes a lot of time. It might take a lifetime for certain people. Even in last 1.5 years, I have also been trying to make up, and I have like come a long way. Like if I compare the day I started and today where I'm sitting, it's like brilliantly different, like very, very, very different. I literally regret being that person, like thinking that way. But again, it comes naturally. It comes while staying in the market, being patient, reading books, seeing new things every day, talking to professional people. So that's how it builds up. It's a total game changer. So for example, I'll give you a very simple example. When COVID came in March 2020, so the stock market crashed bad, like very, very bad. If you just go back and look the chart of the Nifty is the index of stock market. So if you just see the chart, you will see a whole dip, like it just crashed. So a lot of people who do not have an investor's mindset, they panicked. They were like, oh my god, all my money is just drowning. What should I do? They sold everything they had. They were like, whatever we are getting right now, let's take that and leave. It might fall even more, right? So now those same people are cursing themselves. That was the biggest mistake of their life. And a real investor, at that moment would have thought, okay, the crash is bad. I'm not getting a very good feeling about it, but let's just be patient because come on, COVID is gonna get over someday. It might take 6 months, it might take a year, it might take 2 years. The companies, like the big companies, are not gonna vanish. A company like Reliance, Bharti Airtel, Infosys, TCS, Tata Motors, they won't just shut. Okay, fine. There are certain businesses who got shut. There were certain big companies also like Airbnb, Uber, who were facing losses. But again, they didn't exit the market, right? So a real investor must have even bought more and more shares. He was like, that's a brilliant opportunity. Everything, 100 rupee thing is being sold at rupees 50. So why not buy it now and realize the profit later? And let me tell you, people who bought that dip in March and April 2020 tripled, quadrupled, and even made the money 5, 5, 7, 7, 10 times because shares have just skyrocketed from there. As COVID, as India started recovering, the share price couldn't stop. I have seen some stocks getting 10 times, 20 times, 30 times. Just imagine in 1 year, 30 time returns. 100 rupees turned into 3,000 rupees in just a year. So that's the importance of a building an investor's mindset. So I'll give you an example of my mindset. So when I started, whenever Nifty used to go down, whenever market used to correct, when there was a correction or decline, I used to panic. I used to like, oh my god, what is happening? What will happen to my money, right? But now, whenever Nifty is correcting or whenever there's a decline, I am like, instead become happy because now I have the opportunity to buy my favorite shares at a lesser price. So that's about building an investor's mindset, that small dips, minor corrections won't disturb your long-term journey, because when you are in for the long term, it doesn't matter that what happens in a week or a month, right? Long term is all about 1 year, 3 years, 5 years, or probably 10 years, as long as you can sustain, right? So dip is equal to buy, as you can see on the screen. Every dip is a buying opportunity in investing if the company is good enough. And do not fall to FOMO. So we all are, prey of FOMO, and FOMO stands for fear of missing out. So we all see that our friends are, minting money. Like you'll hear your friends say that, oh my God, Raj, I just, doubled my money in just a few days. Why don't you also buy that particular share? So you'll be like, yeah, why not? You get tempted. Okay, even I'll make some money. But again, if you're not understanding what exactly you're putting your money into, you are risking yourself to lose that money 100%. So never act on something which you don't understand. It's better to miss on a good opportunity than to lose your money. That's my mindset. I'm not a risk taker. I'm a very risk averse person. I value money a lot. And people might call me a coward, but when it comes to money, I believe being frugal and being a coward is something good in the long term. That's my take, right? So, and as you can see, the brilliant Warren Buffett's quote down here, that be fearful when everyone is greedy and be greedy when everyone was fearful. So during the COVID crash, everyone was being fearful, and people who bought that dip, who were greedy then, have minted money like anything, right? So that's about being developing an investor's mindset.